Good afternoon, everyone. Thank you for joining us. So we've got a few of our participants slowly coming in. I think we'll just kick off straight away since we have a lot to talk about for structuring lease deals in the post-COVID-19 world. So introducing once again Kyle Swain from Lpc Cresa and Ken Lam. Take it away, guys.
Cheers, thank you. Welcome everyone for week 8. I've got Ken Lam back with me. Anyone who's been on for each of the weeks, Ken has been on before. Ken's one of our directors in Sydney and has been doing a lot of work with some of our key clients on the COVID rent relief work with them and working with landlords to deliver results for clients. So we might just get started straight away because Ken's going to cover off some key information today, which I think will be very helpful at the moment, but also in the post-COVID period coming up, which we need to be thinking about now. On your screen, this is a photo. One of a client of mine is in Perth. This is the lunch rush hour at London Court in Perth. So you can very clearly see there's a significant impact on retail tenants and everybody is impacted differently. But that's a fairly stark image there from lunchtime last week. On to the next one, Beck. So what we decided to cover off this week was structuring lease deals and some of the key commercial terms and the levers that we pull in negotiating lease agreements and how you get the most from your lease in what everyone's referring to as the new normal post-COVID-19. So pop on to the next one and I'm going to hand over to Ken to talk through these key components of the lease structures.
Yeah, cool. Thanks, Carl. Thanks, guys. Thanks for having me again this week. Look, as a result of COVID, look, the rules of the game for both the landlords in terms of lease structures have definitely changed. Look, what we're going to touch on the first slide is this brief introduction of the turnover rent. Look, so for those of you who don't know what a turnover rent is, look, it's an alternative to the fixed base rent, where the rent is actually based on an agreed percentage with the landlord, and it has regard to the turnover, the gross turnover of the business. And look, this can be in addition to a lower base rental or a straight turnover rental. Look, subject to which state it is, it does vary from state to state based on legislation. And look, other definitions include gross sales, gross turnover, or the gross income of the business. Look, why is it preferred over the base rental? With the turnover rent, it does provide the business with the flexibility, and it also doesn't provide the business with a known fixed cost. I think Scott Morrison also said about sharing the pain. Whilst the landlord will share in the pain in the downturn, they will also share in the gains during the good times. Also, and look, it also encourages landlords to help your business to generate traffic so they can enjoy the increase in the turnover rent also, and it helps also align their thinking with your thinking also. What is an acceptable turnover rental? Look, as a starting point, the advice we've been providing to our clients is pre-COVID, what was your turnover for the financial year or calendar year, and how much rent were you paying? That should provide a good basis of the discussion to have with your landlord for a turnover rate. And look, the ATO also does have some benchmarks based on different industries to determine what's an acceptable occupancy cost ratio for a particular sector. Look, it is a little bit complicated compared to other structures. Look, how do you make it appealing to landlords? Look, most landlords prefer or always prefer a known rental structure. Look, some of the discussions we've been having for our clients is providing the landlord with some form of a base rental so they can cover some overhead costs throughout the lease, and then agreeing to a percentage rental to ensure, I guess, that the tenant is able to be survive, and whilst the tenant can also, whilst the landlord is able to generate some income for that property. Look, I might just qualify that also. Look, with the turnover rental, it does not necessarily suit all businesses. For instance, one of our clients that we're advising, they had a very low margin business. However, they had a very high turnover. So before you enter into any discussions with the landlord, you just need to make sure that you have the appropriate margin in place when you're having those discussions. Thanks, Beck. Annual rental escalations. Look, this is an interesting topic. Pre-COVID, annual rental escalations were ranging anywhere from, call it CPI plus 2.5% or 4 to 5%, depending on which landlord, whether it's an institutional, small or small mum and dad. Look, as we're entering into a period of negative CPI, in our opinion, and based on advice we've been providing to our clients, it's pretty difficult for a landlord to insist on annual rental escalations pre-COVID. Are fixed increases dead? Look, the answer is probably no. Look, the ideal outcome would always be to negotiate a annual rental increase as low as possible. Look, some of the advice we actually provide to our clients, some of them actually prefer having a known rental structure, whereas others are happy to base it off the CPI or the inflation rate. Look, moving on to the next one, what is more desirable? Look, again, it does actually depend on the drivers of the business. Look, in a downward market or in a downturn market, a CPI is always preferred, given that the economy is going to have limited growth over the next 2 to 3 years. But again, it does really depend on what the drivers are for the business. So on the last point, will we see midterm market rent reviews? Look, pre-COVID, this was probably not very common across any lease. Look, and typically the market rent review provisions typically occur at the end of the option or at the end of the lease. What the discussions that we're actually having for our clients, for landlords, is speaking to the landlord about perhaps maybe adopting a midterm restructure to take into account any adjustments in the market. Look, coming out of COVID, everyone knows there will be an adjustment, but it's just a matter of when, and trying to make sure the business does get the opportunity to reset that rent at that point in time.
Yeah, good points, Ken. I think right at the moment, what we're seeing with leases that we're needing to renew over the next 12 months, landlords are not yet interested in talking about lower rents, but we know that will be the case in 12, 18 months. So it's a good option for us to get a mid-term market rent review in place for 1 to 2 years, possibly the third year of the lease, so that we can realign things as the market does dip as expected. If it doesn't, then that market rent should, or the market review should be able to hold the line pretty much anyway. So lots of discussions going on where landlords are trying to hold the line, and we're trying to negotiate rents for what we believe the market will be in 12 or 18 months, right?
Correct. Yep.
Okay. Beck, we might just go on to question and answers. Hopefully that's put some interesting information in front of people, and they can consider their lease positions over the next 12 to 24 months particularly. We wanted to open it up to question time as usual and find out what's happening out there. I did put a little personal indulgence on last week, so on this one I've written, in case you were wondering. I did a bike ride on Saturday and raised just over $3,000 for the Motor Neuron Disease MND&Me Foundation here in Queensland. It is something that LPC gets involved in a lot. Globally, we have a foundation called Cresa Cares that donates to charities. So while this was more of a personal one, it's certainly in line with our LPC culture to provide fundraising and charity to charitable foundations and charities that do good work in the communities. So how are you going with questions, Beck? Have we got some this week we can address for people?
We certainly do, and thanks very much for the update. We were all wondering how you would end up after Saturday. So I have had a question from Dennis. Could you please advise the status of the Code of Conduct in Queensland as far as legislation by the Queensland Government?
Yeah, I can. My understanding is the regulations are out for review by some key people and bodies. The NRA is reviewing that document and others. That was about a week ago, so we're expecting the regulation to go before Parliament pretty much any time. I'd be surprised if it wasn't passed this week, but it's certainly imminent, and it will be nice to get that regulation, put the code into effect, and remove one more barrier to getting landlords to commit to the code and commit to the rent relief that our clients and retailers across the state are seeking.
Thank you, Kyle. Our next question is from Kelly. I have asked my landlord for rent relief by email multiple times. Finally, they sent me an application form with quite a bit of info that needs filling in, which I'm getting done. I haven't paid my May rent, and the real estate agent is saying I need to pay the rent as they haven't yet received the application. They said they won't accept it unless everything is filled out, which I'm endeavouring to do. The real estate agent emailed saying if I don't pay the rent this month, then late fees are possible. Is this true?
Do you want to tackle that one to start with, Ken?
I guess the first question to Kelly also, does her business turnover less than $50 million, and does she fall under the code of conduct?
So, yeah, that's the first thing we have to qualify. And then once let's presume Kelly is a qualified business under the JobKeeper program.
He has just clarified yes.
Good, right. You want to pick it up, Ken?
Look, the code. Look, whilst the landlord has requested, depending on what information they've requested, look, if it's including ATO BASAM, look, in our opinion, whilst you need to try and have in good faith discussions with the landlord. Looks, if it's quite extensive, look, some of the information requested could be deemed to be unreasonable and maybe perhaps even a tactic to delay. Look, under the code of conduct, if you fall under the code, Kyle, correct me if I'm wrong, the landlord can't issue you with a default notice under the lease. They have to work with in determining what would be appropriate. So I suspect what they're doing is just apply pressure on you to pay the rent. But under the code, you are actually eligible for rent relief based on the agreed proportion of the downturn in revenue.
Yeah, Kelly, we've covered this a few times in the past couple of weeks, and I was speaking with Ken earlier this morning, just saying constantly seeing this from landlords. It's actually not appropriate. We don't believe that it is in line with the code to seek significant financial data like BAS statements, P&Ls, tax returns, and all sorts of other things. What we are communicating to landlords is that under the code, there's definition 2 that I've mentioned before. It says accurate and appropriate financial information, which comes from an accounting software program or point of sale. It should be adequate. The key is that they're assessing impact on sales, not on your financial ability to repay anything. When you apply for the JobKeeper program and you're successful, then you are automatically considered a business in financial distress. So it's not the landlord's job to assess that. That's done by JobKeeper. So once you're eligible for JobKeeper and you provide evidence of your sales reporting and comparable sales reports, then there's really no other information that the landlord requires other than to ascertain whether your company's turnover is below 50 million or not. In that sense, maybe a past BAS statement could be justifiable, but there's no reason to provide full, and only if that BAS covers just the lease entity that you're dealing with and not several stores or several businesses, which won't give them any information that they need. So by and large, we're facing this on a daily basis, and as Ken said, we're not sure if it's a stalling tactic, whether it's their belief that they have to assess your ability to repay the deferred amount or not, which is incorrect, or some other reason. This is what landlords have always done, and they're applying it to the COVID period unnecessarily. We would push back on that because it gives a landlord an unfair advantage to have full knowledge of your financial capabilities and your financial position apart from your sales.
Thank you, Kyle. We've got a question from Mark. The code and state legislation does not define the point at which tenants are not eligible for rent relief. If, for example, April turnover was negative 80% on prior year, but June turnover bounced back to negative 10% on prior year, is rent relief for June technically available under the code?
Do you want this one, Ken?
You can answer this one, Carl.
Yeah, I think our view and our understanding of the principles and the intent of the code is that it's over a period, and there's going to be fluctuations during that period. I think we've talked before about calculating based on as accurate information as you have at the time what you think the impact is going to be over the period. If 1 month falls slightly short of that, then it may well be still greater than 30% over the whole period. JobKeeper is set up that way as well, which is why it requires you to provide BAS statements at the end of the period. And you may recall, if you were on a couple of weeks ago, I indicated that I'd spoken with a colleague, an acquaintance who is on the tax practitioners board, to understand what would happen to a retail tenant if at the end of the period they happen to be 25 or 28% impacted rather than 30%. And even she indicated that there was no provision for that. There was no real documented position on what would happen at that time. So it's all a little bit cloudy. I would generally, we would generally try to establish an agreement early and then review it after a period of months, after a 3-month period or the full 6-month period. And there may be a little bit of recalculation on maybe paying back some rent that you over the whole period didn't quite deserve, or even getting a little extra credit on your rent if you were impacted a little more than what you first thought you may have been. So we would keep dialogue open with the landlord, and in most cases you can usually explain why there's a spike up or down on sales as well. So just open communication with the landlord. Hopefully, if they've got buy-in to assisting you through this period, it should be okay.
Thank you for that, Kyle. Our next question, our landlord wants proof of the job keeper. We have multiple sites and have qualified across the group, but we are not keen to show them the total group sales and the paperwork submitted to the ATO. Is there something we can access to confirm we are eligible and have received it rather than show the figures?
Look, from our discussions just with our clients, what we've actually been providing is the actual JobKeeper ticket. I believe you actually get a little ticket when you actually apply for it. Look, in terms of eligibility, in our opinion, if you can provide the landlord with some form of notification rather than providing them with the full suite of documents, that should be sufficient for the purpose.
Worst case scenario, just your accountant should be able to provide something to indicate that you've been successful in that application.
Thank you both.
Keep it to the one lease that you're specifically dealing with rather than the whole group.
Okay, our next question. I'm a landlord who has a tenant who chose to close. Under all the restrictions, they could have remained open to trade. Their turnover has obviously dropped 100% due to the closure. Given that it was a voluntary closure, are they automatically entitled for rent relief of 100%, or should it be a negotiation?
Do you have a strong opinion on that one, Ken?
My opinion is that you should obviously it should have regard to the code, but it should be a in good faith negotiation between the tenant and the landlord. Between the landlords, just determine what is appropriate.
In terms of whether it was voluntary or not, there were government mandates to completely close some businesses like gyms and so on, others that essentially lost all ability to trade like restaurants and others, fast casual dining. But let's not forget there are a number of retailers and around 120 national brand retailers who made the decision to close, and that was based on a combination of duty of care for not just their staff but also customers, as well as the financial impact of trying to keep those businesses open during restrictions. So I personally believe that every store that felt that it was the right thing to do to close, that wasn't a willing decision. That was a decision based on the circumstances put in front of them and facing pretty significant potential losses financially and also around the safety and health of their staff and customers. So I would argue very strongly for any tenant to receive the full support under the code. The only difference being that certainly where I'm representing gyms and a restaurant that has been forced to close and had no decision in that, I'm arguing much, much stronger for waived rent rather than deferred rent, whereas maybe the stores who made that decision to close when they could have traded and earned some money, then they're certainly covered by the provisions of the Act, of the code. But maybe it's fair to stick to the code in that situation.
Thank you. Our next question from John. we are not eligible under the mandatory aspects of the code. On previous webinars, you said the code's principles apply to all, calling for amendments to lease arrangements agreed through good faith negotiations. What landlord behaviours would be regarded as bad faith negotiations?
Examples, Ken? We've got some examples.
Yeah, okay. Look for a couple of examples, bad taste, whereas the landlord is refusing to have regard to the code of conduct, notwithstanding that the business has been affected by the likes of COVID, and whilst they don't technically apply under the code, that's a form of bad faith. Whereas an example is instead of providing some form of relief in terms of waiver, they've been insisting on deferring the rent, which is effectively now it's just deferring the paying, which doesn't fix, fix any solution, or certainly does not help a business during this time.
So other examples are the question we had earlier, where landlords are demanding all sorts of financial information and proof of financial hardship for the company or the individuals, which is absolutely not in line with the code and the intent of the code and what's required under the code. And as Ken said, that could be a delaying tactic. If we make it hard enough, they'll just not worry about it, things like that. So we are seeing tactics by landlords that are seen not to be in good faith because they're not aligned to the objective of this whole thing, which is for both parties to benefit by both parties getting through this and surviving so that they can have continuity of business post-COVID. Any action by either party that is not aligned to that objective is simply not in good faith.
All right, well, that seems to be the end of our questions for now, and we're almost at 1:30. So thank you very much again for both of your expertise this week for week 8 of our weekly health checks. And any idea what might be in store for next week?
I haven't given much thought to next week, but we're definitely at a bit of a time where we have covered most aspects of the situation. So it comes down to what sort of problems we're facing, the solutions to those problems. So the more feedback we get from people and questions being sent in, that gives us direction, I guess, for the next week or next 3 or 4 weeks to get through this.
Wonderful. So yes, all our attendees, if you have any questions at all, please feel free to email them to marketing@nra.net.au. I'm more than happy to assist you however we can. Kyle, Ken, thank you very much for your time again this week, and we will see you next time.
Awesome. Thanks, Beck. Thanks, everyone.
Thank you. Thanks.